Welcome to today's market report. European stock markets surged on Monday, boosted by healthy manufacturing data in the region, a semblance of calm in global bond markets, and more positive news of COVID-19 vaccines. DAX in Germany traded 1.1% higher, CAC 40 rose 1.5%, FTSE 100 climbed 1.7%. European PMI data came in ahead of expectations, climbing to 57.9 in February from 54.8 last month, with the dominant German manufacturing sector expanding at an impressive rate. This suggested that this important sector has weathered the current mobility restrictions throughout the continent in a better shape than the first lockdowns. The equivalent news out of Asia was mixed earlier on Monday as Japan's factory activity expanded at the fastest pace in over 2 years in February, while Chinese factory activity grew at the slowest pace in 9 months, mostly due to the Chinese New Year holidays. Government bond yields have stabilized at the start of the week after last week's sharp gains, lessening the pressure on stock markets as rising yields made equities look less attractive to investors. Yields on the benchmark US 10-year notes traded last at 1.4%, below last week's peak of 1.61%, as investors had worried that rising inflation could drive major central banks to tighten monetary policy more quickly than expected. Helping the tone has been the passage of the $1.9 trillion COVID relief bill through the U.S. House of Representatives on Saturday. It now heads to the Senate, and Johnson & Johnson's one-shot vaccine receiving American authorization over the weekend. Turning to the European corporate sector, travel and leisure stocks jumped, with British Airways-owner IAG leading the way, up over 5%, as investors look for a summer reopening of holiday travel. Danone stock rose 2.3% after the French dairy giant prepared to sell its $1 billion stake in China's Mengniu, and AstraZeneca stock climbed 1.7% after the Times newspaper reported that the drug maker has sold its 7.7% stake in Moderna for more than $1 billion. Logitech stock rose 3% after the computer goods maker lifted its fiscal 2021 outlook, helped by pandemic-driven work-from-home phenomena. Oil prices pushed higher on Monday, with traders expecting future demand growth on the back of the U.S. stimulus package passing its latest hurdle. Crude futures traded 1.9% higher at $62.66 per barrel. Brent rose 1.9% to $65.63 per barrel. Gold futures rose 1.1% to $1,747.75 per ounce. On the FX front, the GBP-USD pair retreated around 60 to 70 pips from the session top, albeit has still managed to preserve its modest intraday gains just below mid-139s. The pair regained some positive traction on the first day of a new trading week and recovered a major part of Friday's losses to sub-139s, or over 1 week lows. The uptick, however, lacked any strong follow-through buying, instead of faced a rejection near the key 140 psychological mark amid a sudden pickup in the US dollar demand. The greenback attracted some dip buying during the first half of the European session and was being supported by a modest bounce in the US Treasury bond yields. Investors remain optimistic about the prospects for a strong global economic recovery amid the progress in the COVID-19 vaccinations and a massive US fiscal spending plan. From a technical perspective, the cable pair's inability to capitalize on the positive move and the emergence of some selling at higher levels favors bearish traders. Sustained weakness below the 139 mark will reinforce a negative outlook and suggest that the GBP-USD pair has already topped out in the near term. Market participants now look forward to the US economic docket, highlighting the release of ISM manufacturing PMI later during the early North American session. This, along with the US bond yields and the broader market risk sentiment, might influence the US dollar price dynamics and produce some short-term trading opportunities around the cable pair. The offered bias remains well and sound around the euro and drags euro-dollar to fresh daily lows in the 120.40 to 120.35 band at the beginning of the week. Additionally, the euro fails to garner support from the better-than-expected results from the final manufacturing PMI in both Germany and the broader Euroland. Advanced CPI figures in Italy and Germany are due ahead of speeches by ECB's Guindos and Lagarde. The euro-dollar pair faces immediate contention at 120.23, followed by 120.18 and finally 119.52. The dollar index was down 0.1% at 90.752. Dollar yen was largely flat at 106.56. This is today's market news. Thanks for listening. We'll see you next time.